Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, it's been a couple weeks since we've talked with you. A lot of things have changed in the market. For one, I've got to lead off with this, and that is that gold finally has apparently broken out in price. There's a mixed debate as to why it's breaking out, but I don't really care, Sean. I'm just glad to see some green on the screen. What is your take on not just gold, but some of the gold stocks finally getting moving in a positive direction this year?
Right. Well, gold itself, it hasn't quite broke out, at least not on my charts. What it's doing is it's testing that high from December, and just right up there. So it could take some time to get through that because people naturally sell into any move toward there, at least for a while. As for what's driving it, well, it's really kind of a 1-2 combo. Even though the economic data has mostly been strong. We have low unemployment, stuff like that. We have had some soft economic data recently. U.S. manufacturing slumped further in February, for example, and the University of Michigan's Consumer Sentiment Survey that fell for the first time in 3 months. So that's happening, which maybe makes people think that the Fed won't have to hike rates so much. And at the same time, the annualized rise in inflation in January, well, that was the smallest in nearly 3 years, right? Well, it helps because last January saw a huge rise. So it's all comparative. But in any case, it's easier for the Fed to cut rates. And we're starting to see the market think, maybe that could happen. And at least this is my interpretation of it. I could be wrong. But where we see it the most is we see it in gold and gold miners. And so I just recommend a new one to my resource trader subscribers on Monday after Friday's close. I knew what I was going to do coming into the week. And this could play out quite nicely, especially if we start to get hints that there is going to be a rate cut, maybe in June. I was thinking we'd have a June cut, and then the Fed pretty much squashed that recently. But maybe they'll come back to it because the Fed talks out of both sides of its mouth. I think to keep us all permanently in a state of confusion, frankly. And so if they do cut in June, that'll really boost the spirits of the gold traders because then they'll think, well, then there's probably more coming. The Fed has hinted at 3 rate cuts this year. If those start to be priced into the market, then yeah, we could see gold really head higher.
Well, Sean, in that kind of an environment where the Fed finally does cut rates, there's a lot of commentators that have mentioned that that would be good for U.S. equities as well. And there's some people in the camp that think, hey, we could just keep seeing everything break out together because if you look at things, the general markets are and the indexes are popping higher, the cryptos are popping higher. A lot of sectors that were laggards in the past, even the small caps have gotten a bid, and now we're seeing the commodities start to rip higher. Would a rate cut just be an across the board good thing for all markets, or do we need to see a divergence where people start pulling some money out of the markets and moving it over into something like gold?
I'd be happy to see everything rally all at once. I don't know if that's what would happen. Probably part of what's moving gold is people are kind of worried about geopolitical events, including the fact that Congress seems unable to pass any kind of real budget. So there could be some of that, but I think rate cuts would be a positive for a lot of things across the board. That's the way I would look at it. And so here's hoping that's actually what's going to happen.
Well, and Sean, we should note that you've been on the show a number of times and talked about a couple of different sectors, AI being one of the mega trends you saw continuing to unfold when some people got a little gun shy earlier in the year or even at the end of last year when there was some corrective moves. You pressed your bets in the AI space, and same thing with defense and cybersecurity when they tie in with AI. Maybe just give us an update on that market. How are you looking at things in the tech sector?
Well, it's not a good day for AI today, but the trend has really been in its favor. And that's okay. You can have some give back. I'm still expecting, I'm not sure if I discussed this the last time I was on your show, but cyclically speaking, we usually see tech and the markets, but especially tech, pull back in February and March, and then bottom toward the end of March, and then take off toward the end of the year, or at least zigzag their way higher through the end of the year. And if that plays out, then this pullback is fine. That's the way I've been telling my subscribers. I hope I'm not wrong, right? We have some nice gains. I'd hate to see them whittled all the way to nothing. We're in a lot of good stocks, and I think that we are actually looking at what could be a transformative year. There was a great chart put out by ARK Investment Group, and I know people have their problems with Kathy and ARK Investment and all that stuff, but they do some good research. And they had a great historical chart on how new technologies boost economic growth. And they actually went all the way back to year one. They included things like concrete, stuff like that. But they also had some more new stuff, like the last tech boom, telephones, stuff like that. And what happens generally is a new technology boosts economic growth. But what they have found is the time span that it takes to unfold is getting shorter and shorter. And so if artificial intelligence follows that trend, we're going to see a lot of growth in a very short amount of time. And what ARK is expecting is GDP growth of over 7%, which is crazy. I mean, it sounds crazy, right? But I think they're looking for it to start unfolding next year. So we'll have a big buildup in GDP growth this year and then just a lot more next year. And I found another chart from JP Morgan. This was all in the Super Cycle investor issue that I sent out today. And what it did was it went down industry by industry who has the potential to use AI to the best effect. No surprise, things like tech is an obviously one, communications, finance, but also there's plenty of other stuff in there for energy and like stuff like that. Now, again, that's their best estimate. That doesn't mean what will happen. But in energy, for example, I mean, half of the US energy CEOs already say they're using AI in some way. One way it's being used in the energy space a lot is to help find the best fields to drill in. I mean, they have a lot of targets, but they're using AI to sift through all the data and find the absolute best targets to drill on. And then you combine AI with the new robots that they have coming online, and people can take a lot less risk in the oil field. That's always been a problem. People get hurt, right? But now if a robot's taking the risk and you can use AI to make those robots more reactive to immediate changes in things. That's a big boom for at least select companies, not all companies, but certainly select companies. So I think the broad economy is still wrestling with AI. Heck, I know I'm still wrestling with AI, and not sure how it's all going to work out, but we see potential there, at least for a bunch of companies to do really, really well. I still think that the larger companies will do the best because they have the most money to throw at these things. That said, one should be very wary of CEOs who promise, oh, this is going to juice our profits by 30% or something. They're just guessing. They don't really know. And especially if they try and replace good people with AI, a lot of times the AI isn't ready yet. So it could be kind of chaotic, but at the same time, I'm just going to come back to the point ARK Investing was making, is that time and again, we've seen new technology boost economic growth. That's happened over and over and over again. And the time span for that transformation gets shorter and shorter and shorter. And I'll add that AI isn't the only thing out there. We also have adaptive robots. We have other new tech coming along as well. So there's a bunch of things out there that could really make economies much more efficient and boost productivity. And if they boost productivity, pretty much everybody's going to win. So we'll have to see how that goes, but I'm very excited about that.
Yeah, Sean, it's such an interesting topic. It makes me think when you're talking about it getting shorter and shorter, each of the innovations, some of the Ray Kurzweil, the futurist ideas that eventually there's this singularity point where things are moving so quick that information is doubling quicker and the time between it is getting shorter and shorter, that we are moving towards that point. Now, if we start having 7% GDP growth, that really throws a real wrench in the gear of the people that are still holding out for a recession anytime soon. And And it does beg the question, if all the robots are doing the work and the AI is doing the work, what are people going to do? But I want to throw an idea at you because we've seen a lot of articles out, maybe in the last couple of weeks, just about this. The parallels between what we're seeing in AI and tech and robotics and some of this efficiency and some of the promises from the financial companies. It reminds a lot of people of the 2000 tech bubble, where the internet obviously has changed our lives. It was probably understated how important the internet would actually be. But there was also a lot of companies that went to money heaven. There was a lot of companies that didn't make it. There's actually only a few from that period of 99 through 2001 that are actually still around, but they are household names. Is that what you're anticipating here too? Is like many will be called, but only few will be chosen?
Yeah, I hate to say it, one would like to think that progress and prosperity is going to be spread out democratically, but that's not the way our society is geared now. The way it's geared now is that these oligopolies can really leverage the advantages they have and really make the most of new tech that comes along. So companies like Microsoft, for example, Amazon, stuff like that, they are going to be winners. Now the only way they won't be winners is if they get out ahead of their own skis, and just through incredible mismanagement fall on their faces. And then it'll be someone else's chance to win. But the odds favor the big companies doing very well. That said, there's still the potential for new companies to come along that have a brand new innovation to do extraordinarily well on this. So I wouldn't count the small guys out yet. It's just you're going to have to be very selective on which ones you actually choose.
Well, and to that point, you've made some really good bets with your subscribers looking at companies in defense and cybersecurity and how they're using AI in a unique way. Would you like to share some of the recent wins you've had?
Well, it's not a win until it's banked. And we're still writing this thing. But for example, as you and I talk, AeroVironment, which is a drone maker we own, that's 28% on the day. And their earnings just knocked it out of the ballpark. Part of it is they're riding the war cycle, which is absolutely true, but also they're using AI to control their drones better and stuff like that. And really, the war in Ukraine and the conflict in Gaza have both emphasized just how important drones are. Drones are reshaping the battlefield, and they're much, much cheaper than sending in a human piloted aircraft. But it's not just aircraft, it's not just flying drones. They are working on now very quickly to deploy artificial intelligence controlled tanks. We will have those soon. They'll be out there fighting alongside tanks that have people in them, and say one human tank controls five of these other things, which will be smaller because they don't have to have a crew in them, and you don't have to armor them the way you have to do with a human one. So they're much lighter. They can move around faster. Of course, it's going to go that way. Of course, they're going to have AI controlled submarines. Even if they're diesel powered, I mean, they'll be able to stay out on patrol for months. They don't have to even surface. They can just go out there and like do the job, and they can hunt other submarines or anything else you want them to do. There's a whole area, a whole new aspect to the theater of war that is going to be controlled by drones, by artificial intelligence. Hypersonics is something else we're into. It's absolutely terrifying, but they can make these missiles go so fast that you can't hit them, or at least the odds of you hitting them are very, very small. Know what can hit them? Artificial intelligence can, because it can predict where the damn things will be. So that's another way. And cybersecurity, that's something else. I just saw a headline. I think I posted it on Twitter. It's United Health got hacked, and they did some kind of response to it, and like all their customers, I mean big corporate customers, like calling them out and saying, this is terrible, you aren't really fixing this, which means that they have to invest more in cybersecurity. What's making hacking so much worse is artificial intelligence, because hackers can like line up computers that have artificial intelligence on them and use them to do hack attacks over and over and over again, millions of times an hour. And so you need some kind of cyber response to that. So select cybersecurity companies are going to do extraordinarily well. And the ones that are doing the best are ones that are using artificial intelligence in their response to the bad guys who are using artificial intelligence. It's an artificial intelligence arms race. It is terrifying and both profitable at the same time. I mean, I have to tell you, this stuff worries me a lot, quite a bit sometimes. But on the other hand, I'd be a fool to ignore it for my subscribers. The potential there is just extraordinary. We'll be using AI on the border, building something called a smart wall, where you just use a biosignature to tag people coming over the border. You can keep track of them wherever they go. The computer keeps track of them. And so they think they've gotten away, and you just show up whatever house they went to, and you put them in the van, take them back across the border. We'll be doing a lot more stuff like that too. Facial recognition combined with AI will make it very, very hard for bad guys to just get through in a crowd. There's a lot of ways that this new technology scares the bejesus out of us, but it also offers a lot of potential to stop the bad guys from what they're going to do anyway. So it's really something we have to embrace and we have to work with.
Yeah, Sean, it is definitely a brave new world. And like any tool, it can be scary and terrifying, but it can also lead to progress. It can lead to great innovations. It can lead to more efficient time. So definitely a mega trend worth following and something that you have been flagging the entire way up. So I think hats off to you on a great call and on sticking with it because there's so many areas it's continuing to develop into it. It's going to be a theme that's with us for a long time. You brought up a point, though, that it's actually helping energy companies. I'd like to get your thoughts on energy because there are a few new ideas in the oil patch, unlike traditional mining that we sometimes talk about, where it doesn't seem like there's that many innovations. The oil patch was on it when they came up with fracking and they came up with horizontal wells and they've come up with different things. Now they're crunching big data to look at these different fields to see what the best targets are. To your point, there's some innovation in the oil patch. How are you looking at the energy space these days?
I like the energy space a lot. In fact, if I wasn't going to recommend a gold stock on Monday, I probably would have recommended a oil stock simply because the existing oil positions we have are doing quite well. There's a bunch of reasons why. Robots and AI is a small part of it, though it's a growing part of it. But for example, OPEC Plus just had a meeting. They decided to extend their production cuts of 2.2 million barrels per day to June, and I bet they extend those again. Why? Because OPEC wants higher oil prices. The big plans that Saudi Arabia has don't really work with oil prices this low. And like you might be looking at the price of oil saying, hey, it's near 80, that's not low. Saudi Arabia wants it higher. They want it higher, and they're probably going to get what they want. Then we have rising demand. Depending on who you listen to, the International Energy Agency predicts that oil demand will grow by 1.2 million barrels per day this year. OPEC believes it'll grow even more by 2.2 million barrels per day. A million barrels a day is a lot of oil. That's a lot of difference. I think OPEC's probably more correct because one thing that has been slowing down oil demand growth is that China's been experiencing a slowdown. Nobody believes the 5% growth that they had or that they said they had last year. But here's a funny thing. Even though China's economy was suffering last year, that country's oil demand grew by 6.6%. If they do get their act together and actually put the stimulus out there to get their economy back on track, which they are giving hints they are going to do, no hard plans yet. So you don't want to bet the farm on it, but that seems to be the direction they're moving, that they need some kind of government stimulus to actually get consumers to open their wallets again. But if they do that, then we're probably going to see strong oil demand growth in China again. The current estimate from S&P Global is 3.1%, but if they can get demand going again, that's probably another 6.6% or 7%. And so that will kick global oil demand into higher gear. Now, what can hold things back? We do know that U.S. crude oil production just surged to a new high. We just heard that from the Energy Information Administration that U.S. crude oil production, how much did it hit? 13.3 million barrels per day in December. That's a new record. So anyone who says, oh my God, we aren't doing enough drilling. We're doing plenty of drilling. In fact, we're doing smarter drilling because the new tech makes each new well they drill more economic and more productive, more efficient. And so we're seeing a lot of that stuff now. And so I think U.S. oil production is near a new peak, even though it just broke out, unless we get higher oil prices. But to bring me back to my point, I think we're seeing higher oil prices this year. My target is $93 a barrel. That's where I think oil is going sometime this year. Now, it could blow past there. It might not stay there. It could come back down. Oil is extremely volatile, especially the more expensive it gets. It can really swing around. But I don't think anyone should be ignoring the oil space now. There's some real potential there. There are some companies that have really been, I don't want to say right sizing, more like smart sizing. They've been really focusing on what they do well and making sure they have enormous amounts of cash flow. This allows them to buy up new reserves or invest in new tech, stuff like that. And those cash flow kings are the ones you really want to invest in. And so I think anybody should be doing that. Not only those, but also the companies they're going to buy. That is, those companies that have large reserves but don't really have the money to exploit them. Well, they're on the shopping block. I mean, in just the past few months, we've seen ExxonMobil, Chevron, Occidental all make major mergers and acquisitions of like other companies because they wanted their reserves. What they're trying to do is expand their resources and expand their resources at a lower price point so they can pump very cheaply just in case prices go down again. So I think the oil space is really exciting, and I think people should be looking at that now. I know the price of oil seems to be asleep, or at least not being mentioned on the news so much, but oil stocks are moving. I think people should be looking at that because the potential there is quite good.
Well, we'll wrap it up there, Sean, but some interesting thoughts on the energy sector. And yeah, it is curious that the oil price really isn't breaking out or breaking down, but the stocks have started moving the last couple months. And I like what you said there about smart sizing. These companies are cashed up looking to add more reserves. So that's a double fold thing. You have the big companies getting bigger and having better cost of operations, and you have a lot of the smaller to mid-sized companies that could be the companies they're taking over. They could have targets on their back for mergers and acquisitions. So definitely some ripe pickings in the oil patch, and good thoughts on the cybersecurity, defense, and AI, and it's also the gold sector. Always great to have you on the show, Sean. If people like getting Sean's thoughts, definitely click on the link below this interview. It takes you over to the Weiss research page where you can see all of the offerings that Sean has in his stable. And Sean, as always, looking forward to our next conversation.
It's always fun talking to you, Shad. Thanks a lot.